Welcome back. We are doing first of our pre-budget shows with four stalwart economists, Samiran Chakrabarty of Citi, Soumya Ghosh of SBI, Kavita Rao of NIPFP and Kaushik Das of Deutsche Bank. Gentlemen, and Kavita, thank you very much for your patience. Before going to the break, we took a poll on the fiscal deficit. Soumya and Samiran are expecting a 5.5% fiscal deficit in the forthcoming year in FY25. Kavita and Kaushik are starting at 5.3, which is the CNBC-TV18 poll as well. Samiran, to you first, wouldn't a 5.5 disappoint the market? Already, India is an outlier among emerging markets with a very high debt to GDP ratio. And the government's stated goal is 4.5 in one more year. So, should they not come to 5.2, 5.3 in 25?
So, Latha, let's be practical here. Historically, we have not been very good at meeting the FRBM targets. We have always kind of kicked the can down the road a bit on FRBM with any kind of shock. So my sense is that this is a very peculiar year where funding the fiscal deficit is unlikely to be a problem because of global bond index inclusion. We're going to get some $20–25 billion of extra demand for bonds. In that kind of a year, to have a marginally higher fiscal deficit might not be that big a challenge. And this government has always been very good at presenting credible fiscal numbers. So if they want to keep the capex focus intact and the fact that it's a pre-election year where deep revenue expenditure cut is difficult, then if you want to make it credible, the fiscal numbers, then maybe a tad higher number is a better option. Even if you meet that 4.5% of GDP by FY27, sky is not going to fall. So I guess that's not something which will push the government into necessarily announcing a number which is exactly in line with that drop.
I'll take your point that at the moment there is a big buyer standing with $25 billion in the bag. Soumya, is that the reason why you also think it's 5.5? They will be able to get away because of a hungry market?
Latha, I think there is also one aspect I would like to add to Samiran's point is that if you look into the interim budget fiscal deficit numbers and the budgeted fiscal deficit numbers from 2004 onwards, you will find that there has been a little difference between the two. Okay. If I take the example of 2019, I think the figures were kept 10 basis points higher. It came down 10 basis points lower, and that was because of a revision in the nominal GDP. Yeah. My sense is that they will keep it at 5.5%, but there is every possibility that number will actually decline because of the statistical artifact of a higher GDP numbers when the numbers were released in May, on the last week of May. So that will already give a cushion to government of around 10 basis points of a reduction in fiscal deficit when the numbers are announced in the budget. So my point is that when they're getting a cushion of 10 basis points already because of an anticipated higher GDP growth rate, the projections are yet to come, which will come in February, then why experiment with a lower fiscal deficit number? And this government has always under-promised and over-delivered in terms of the fiscal deficit numbers. If you look into the actual fiscal deficit number of 9.2% was in COVID year, even if it comes down to 5.5, that's some consolidation of 370 basis points. And given the fact that government expenditure this year, if you look to the ministries, the expenditure of the different ministries, it is already around 60 to 65%, and that has been the norm. So an automatic stabilizer has been built into the budget of expenditure saving, and that I think is also going to play out in the next year. So I don't see any harm if the government keeps it at 5.5%. Let the number drift towards 5.4 in the July budget because of statistical reason, and then take a call on how to move forward.
That is quite possible that they revise the number in the July budget, because it's possible that the base may change because they have not been able to spend on capex in the last 3 months or 4 months. In fact, we saw a poor capex even in October, November, didn't we? So Kaushik, very quickly, your numbers for both the current year fiscal, will it be 5.9 and 5.3? What will you go with?
So 5.9, I think, will be achieved this year, irrespective of elections. And that was very clear even 6 months back. So I've given in my report all the numbers, how it will be achieved, the upside, downside in different components. But I don't agree with the reasons which Samiran and Soumya talked about. I think it's very important that you stick to the fiscal consolidation agenda and you reach 4.5 in FY26 because you are getting bond index inclusion done and maybe more index inclusion will happen. You need to show that you are serious about hitting that 4.5%, and it's always easier if you are at 5.3 this year and another 75 basis points consolidation next year.
Okay.
Remember that India's debt GDP, public sector debt GDP is already above 80%, despite all the improvement that has happened in the last few years.
Okay.
And if you take the consolidated fiscal deficit with states, it's more than 8%, right? It's still very high. So when you're getting an opportunity, you never know what can hit you 1 year down the line. Your debt GDP can again go up from 80 to 90.
Yeah.
So when you're getting the opportunity, things are good. Try to do the reduction, and I think it's easily possible to show 5.3. Just one point, Latha, I would like to make for markets. What is important is not 5.3 or 5.5. It's what the kind of market borrowings that is expected, both on net market borrowings and gross market borrowings. So gross market borrowings were about 15.4 trillion in this year. If it is around the same number or a little lower, that is around expected lines. But if it is 16 trillion or higher, markets will sell off irrespective of the fiscal deficit number.
What's your net number?
It should be around 11. It should be around. So if it is 15.4, it should be around 11.2, 11.3. It should be lower than last year, is what my calculations are.
Okay.
And see, there are these complications of switches that the government will announce when they announce the revised estimates.
Yeah. Actually, we can't do that. Kaushik, we can't get into it because we're out of time. But I take your point. Our poll threw up 12 trillion, and I think Soumya and Samiran are around that figure. Kavita Rao, absolutely out of time. But what is a decent nominal GDP number that the government should go with?
The advanced estimates have thrown a googly at all our anticipations because the nominal GDP seems to be much lower than the budgeted number.
Yep.
I would think a 10.5, 11 is what I'd look at.
11 was our poll as well.
Yeah.
For viewers, that the nominal GDP becomes important because the fiscal deficit is a percentage of the nominal GDP. So what do you assume by way of real growth and inflation is what we want to know. Soumya, your real GDP, your nominal number?
I think it should be at least 11% because the RBI has already said on record that the next year growth could be close to 7%.
Absolutely.
And CSP is still higher than RBI.
Yeah, and the wholesale price index was negative all of this year.
Yes.
So maybe we will have a positive wholesale inflation. Your nominal GDP number, Samiran?
I think 10.5 to 11 is where the government will probably pay.
Kaushik, you too? 10.5 to 11?
11%, yeah.
Okay, if it is 11, then I think the government will have elbow room. I think we have more or less the big budget numbers in place. Let's see how the actual budget or the vote on account measures up. Samiran, Soumya, Kavita and Kaushik, thank you very much for joining us in the first of our pre-budget macro numbers. That's it on this edition. There's more lined up for you after the break.